And so we've started to see that become like explosively successful, right? It's in airports, it's in Vegas casinos, it's in, coffee shops, it's in gyms. It's like literally everywhere you can think of where there are people congregating. There is a community of Helium deployers like rapidly trying to like put hotspots in those places.
Hey everyone, welcome to the LevelUp podcast, presented by the Medici Network, the exclusive community for financial institutions to engage with blockchain native funds and founders. I'm your host, David Breiter.
And I'm your host, Sean Farrell. Before we kick things off, make sure to hit the subscribe button and follow us on Twitter for the latest episodes.
This podcast is for informational purposes only, and nothing herein should be considered financial, legal, tax, or investment advice. The views expressed by our hosts and guests are their own and do not reflect those of the Medici Network, Fundstrat Global Advisors LLC, Finality CP Management LLC, or their respective affiliates. All listeners should consult their own professional advisors as to the legal, tax, financial, or other matters before making any investment decision.
Now, let's get into it.
Hey everyone, welcome back to Level Up. David and I are excited to be chatting about Helium today, the decentralized wireless network. We're going to be talking with Amir Haleem, co-founder of Helium and CEO of Nova Labs. David, how about you kick things off by walking us through some high-level token stats?
Yeah, Sean. So Helium, ticker HNT, is the token. And it's about $1.80 today as the podcast recording. And about 340 million market cap with about a 400 million fully diluted value. Helium is a DePIN network, or a decentralized physical infrastructure network. Past guests we've had on the show in that category include Mike from GeoNet, which I encourage you guys to go check out that recording. But Helium is really one of the categories of projects that is trying to, create a network of, physical devices and connect to the real world using blockchains and token incentives. And Sean, tell us, a little bit about the history of Helium, how they got here, and some of the products today.
Yeah, that's right. Their North Star has always been trying to build out these wireless networks, different versions of wireless networks. So the first iteration was actually an IoT network. And the way that worked, like you just said, they used tokenized incentives to bootstrap the supply side of this network, essentially incentivizing people to buy these nodes, put them in their homes, and provide service to, wireless service to internet connected devices. Fast forward to a few years ago, and they shifted their strategy towards focusing on a mobile 5G network. And their go-to-market strategy was very similar in structure. They shipped 5G nodes through partners and incentivized folks to buy these nodes, put them in their homes, and build out an actual wireless mobile network. Very similar to we'll get into the exact product offerings they have in a moment, but they're building out actual, cell coverage.
Yeah, that's right, Sean. And just here's a look at, what, you see these hotspots. They've really kind of gotten them across the globe. And it's kind of the promise of blockchain, building decentralized new internet. And this is kind of from the networking layer across. And they've done that. They've really incentivized this supply side build out, getting, individual users to put these, whether it's IoT devices or now 5G devices in their home. And here's just some of the growth of some of the legacy IoT hotspots since about October of last year, a little dated back to September from Asari. And you can see that there's been some growth. It's not very fast. This is obviously the legacy business, but still some growth there on that hotspot wireless device. And then here we're looking at the new Helium Mobile hotspot wireless, and that's growing about 6.8% quarter over quarter. And I think, as of September here, they had at least almost 35,000 hotspots providing coverage across the globe and the network. And, turning to, thinking about what they do on the business side, Sean, tell us a little bit about Helium Mobile, a little more detail.
Yeah, so Helium Mobile has two primary offerings. The one offering you can think of as very similar to a traditional MVNO model with some slight nuances. For the newly initiated, MVNO stands for Mobile Virtual Network Operator. And you can think about that as, it's what, Boost Mobile, Cricket Mobile. I think Ryan Reynolds has his own MVNO. But essentially what they do is, they buy data wholesale from carriers and run their own mini carrier service, and that's kind of what Helium Mobile does. They charge a subscription fee to folks that can sign up for their service, and it's generally a lot more affordable than large carriers. And the way the economics work, or that, or the actual value flow within that system is, when users, when their data flows through Helium nodes, the network gets compensated through data credit purchases and Helium burns. But they do have a partnership with T-Mobile, and when the coverage of the Helium Mobile network is not robust enough to provide good coverage, data actually gets routed through these T-Mobile nodes, these T-Mobile cell towers, and Helium actually has to render payment, buy data wholesale from T-Mobile in that circumstance. And so that's one thing I'm curious to get some information from Amir on, in terms of how much data is actually being routed from these subs through T-Mobile versus Helium nodes. And then concurrent, separate to that, their parallel service, it's kind of, the dynamic is a bit reverse, but they actually have partnerships with a couple of large carriers, AT&T being one, in which they actually provide offloading to these carriers, such that if an AT&T user is in some kind of dark spot, they can actually leverage Helium nodes to offload data and receive much more robust coverage.
Yeah, that's a great explanation, Sean. And it seems like the growth driver in the future might be this carrier offload. And you mentioned here about how it works with the data, the burning and the value flowing back to the network. But as people use the network in general, whether that's Helium or carrier offload, they have data credits where people will pay Nova Labs, and Nova Labs will create these credits, and kind of like a prepaid phone card. As people use the credits, they'll then go and get rid of the credits, and they'll burn Helium, burn AT&T with that, and send that back to the network. And here you can see just kind of some of the network revenue and burn really statistics. This is from Blockworks, and it's a good dashboard. You can see earlier in the life of Helium, there's IoT revenue, and it's really transitioned to mobile, and it's had some strong growth. Maybe kind of flattened out a bit the last couple of months, but still, this is over a month, and this is looking pretty good. This is a weekly chart of Helium Mobile, and you can see there was a big addition there where they started adding Helium Mobile revenue into the burns and started buying that back in September. And I think that part of the market really hasn't grown that much in terms of burns, but the carrier offload, as I mentioned, really does seem to be kind of the growth area in the future for them, and will be interesting to hear what Amir thinks the opportunity is on that. And just back to the point on the value accrual and how it flows through, the tokens really, they get burned. So these are the daily buybacks. So you have I think before in the prior chart, I think I saw maybe we're looking per week, you had about 500,000, 400,000 per week dollars. And in token terms, you're seeing that be about, let's call it 30,000 tokens. And that's a good, deflationary component on supply. And this is the cumulative burn over here on the right-hand side. And let's just kind of look at the token chart of the supply chart. I would say Helium is not really one of I think they've made it past the kind of low float category, maybe not fully out float, but past the low float. And, they were doing a lot of token incentives early in the life to get that network built out. And now they're actually starting to burn. And this is some data from Blockworks showing that they might even be kind of close to turning, profitable or net deflationary.
I think it's worth noting that they did just undergo halving a few months ago. So, if their burn remains steady state or achieve some kind of, marginal growth into the future, they should actually turn deflationary or persist being deflationary, net deflationary, that is.
That's a great point, Sean. Tell us about the valuations here.
There's no direct comp, I should say. There's no other real wireless comp, but we put together a comp list with other names within the DePIN category. These all broadly have the same mission of using tokenized incentives to build out some kind of hardware network, and hopefully create demand for that network that eventually outpaces a lot of the issuance that was used to bootstrap supply. And you can see that broadly speaking, this category, along with, most alts, have not done all that well as of late from a price perspective. But I do think it's interesting that you have a few names here that are actually generating, non-negligible revenues. You can see here that Helium's generated about 19 million in 30-day annualized revenues. That compares quite favorably to some of the other names, save for Aether. I hope I'm pronouncing that correctly. And then, if you look to the multiples of annualized revenue, it's trading, I guess you could say, relative to some other crypto names, other crypto verticals. It's trading at a quite conservative multiple, perhaps not compared to other carriers or MVNOs, but at a 17x circulating market cap ratio to annualized revenue, I think it's getting to a more defensible valuation.
Yeah, maybe still higher in compared to traditional carriers, but we'll see how that kind of settles out. And there's probably some price where it might make sense. I mean, one nice thing about the revenue from Helium is it's not cyclical. And DePIN category, some of it is less cyclical than other, but here you have the tokens that have been fairly cyclically tied to just the broader price of the digital asset market. And this is just a chart since early September. And, it's been a difficult market for most tokens. All of the comp sets really down over that time period, with Helium being kind of the second best performing. So that's maybe something to be said. And here is just kind of a technical chart just to kind of finish off. And really, a bit of a downtrend here since obviously it's highs in 2021 yet to really make a new high, and a downtrend as well since, across 2025, like most tokens in the market these days. But maybe not at new levels of support yet, but maybe there's a couple coming up, and maybe those could be interesting levels. And I think we'll just have to look forward to hearing, what fundamentals could do to help turn this price around. And Sean, is there anything you're looking forward to on the show?
No, I think we covered all the bases. I think this is one of the more interesting projects, in the crypto space, in my view. You mentioned the non-cyclicality of the revenues, which I think is a pretty interesting quality in this name. It was a feature of GeoNet as well, and I think there's perhaps some hidden alpha perhaps in this episode. We'll see, but no, I'm just excited to talk to Amir about the traction for Helium over the past couple of years and see where he sees this thing headed.
All right, let's get into the show.
All right, let's do it.
Hey everyone, welcome back to LevelUp. David and I are here with Amir Haleem, CEO of Helium. Amir, welcome in. Happy that you could join us.
Yeah, thanks for having me. Good to be here.
Yeah, so maybe to kick things off, as always, we'd love to get some background from you, kind of your origin story, what you were doing maybe before Helium, and what led you to build this project that I think a lot of folks don't realize is actually over a decade old, 12 years.
I started my career in video games. Like I actually was, I started as a video game tester, which is, by the way, like the worst job in the world. It's I shouldn't say it's the worst job in the world. It's not, but it's a lot different than you would expect.
That sounds like a lot of fun. What do you mean?
I mean, people think it's a lot of fun, and it's really more like, here's a list of 900 bugs. Please reproduce them, and some of them take 3 hours to get to the point in the game where, you could even reproduce it. And so I started off that way. I worked in game development for a while. I worked on stuff like Battlefield 1942 and was a huge video game guy. It was like my whole life. I played esports professionally for a while. Like I was the best Quake 3 player in the world. And, so that was my universe for forever. And through that universe, I met Sean Fanning, who is the founder of Napster. Depending how old people listening are, they'll either find that amazing or have absolutely no idea who that is. But Napster, I always revered as sort of the disruptor, that was the college kid that upended an entire industry, kind of on his own from a college dorm. And I was always in awe of that. I just thought that was the coolest thing. I grew up in England where, startup culture doesn't really exist the same way. We don't have a Silicon Valley. We don't have that same sort of, we don't, it just doesn't feel like it exists there the same way. And so I was always in awe of it. I met Sean playing Quake or World of Warcraft or something. He was working on a World of Warcraft business that he sold, and we just, stayed friends over time. We had a lot of mutual friends. And then sometime, I think it was like 2012 or 2013, we started talking about building a sensor network for some reason. He was like, "Oh, I know all these people building like physical hardware that needs sensors. And there isn't really a network that supports just sensors, right? Like I just want like a little sensor that can, measure the air quality or measure, how many people are in the area. And I want some way to connect that to the internet really cheaply." And that was kind of the genesis of the idea, is that we had a bunch of entrepreneur friends that were building physical hardware that needed support for small devices. So there would be kind of like Bluetooth, but work when there wasn't a phone nearby, right? Like, so it could be in the middle of a forest or it could be anywhere. And that was the genesis idea behind Helium. It was like, let's try and build a physical network for Internet of Things devices, which is what those were called. We started in 2013, and then it has been the craziest and twistiest journey ever since then. But that's kind of how it all started, and my video game career, my video game playing, I guess, led me to that path via Sean.
Like we talked about, this started a while back, and it actually was not even crypto related at first, right? So maybe, it'd be great for you to walk us through the many lives of Helium and get us to where the Helium network is right now and what the thesis behind the network is.
At the time when we started, like I said, we were very focused on solving these IoT problems, and at that period of time, like that was actually the right problem to solve. Like we had guys like Doorbot, which became Ring, approaching us at the time because like they needed a solution to exactly that problem. Maybe not for the video capture, but some way of communicating with their hardware that didn't depend on Wi-Fi or would work if the Wi-Fi was like disconnected or whatever it was. So I think we were onto the right thing at the right time. The thing we hadn't figured out was, how do you deploy a network, right? Like, how do you get like a big wireless network deployed, and how do you do it without spending, billions of dollars or tens of billions of dollars that we obviously didn't have? Because the state of the art for building wireless networks is basically like, I'm going to borrow a ton of money, and then I'm going to go find as many like locations as I can and put towers there with like, radio equipment on them and power and backhaul and, generators and all that stuff. And we just in general thought that there might be a different way of doing that. Like you may be able to incentivize a community of developers to do it, for example, right? Like if they were builders of the app, maybe they would be incentivized to do it. And one of the things that was cool about IoT devices was that you could create coverage areas that were like miles in size with like, a little device that was this big that looked like a Wi-Fi access point. And so we were kind of like, if we could get 200 of these deployed in a city, you would have full coverage in the city for like all of these IoT devices. And those IoT devices might be things like, like location tracking devices for medicine vials, or they might be, wildfire sensors, or they might be, heart rate monitors. We had lots of different ideas of what the applications would be. But a lot of the ideas were actually driven by companies that we were talking to. Like we would talk to like Target or something, and they wanted to build, something. So we were in the right, I think we had the right idea. We didn't know how to actually execute it. Like we didn't know how to deploy the network. We spent a lot of time building like wireless protocols and development tools and stuff that made it easy for people to build these devices. But we always kept running up against the same problem, which was like, the device isn't that useful if the coverage area is just like, my office or whatever, right? It like kind of needs to work everywhere. And that was always the part that we never cracked. And so we spent many years chasing like different verticals within our IoT, basically, right? So like we were in healthcare for a while. We were like, okay, hospitals need this stuff for like all kinds of different reasons. We were in restaurants for a while because we were like, the food service industry needs a lot of different sensing and tooling. And we thought by going into those verticals, like we might end up building a network along the way, sort of as a necessary sort of backdrop for that. And I think that was actually working, but it was also never what I wanted to do. Like I didn't want to work in the healthcare industry building sensors, right? That was not why we started Helium. I had like very grandiose vision for what we were trying to do. And so then, fast forward to about 2017 or 2018, none of us had really paid a whole lot of attention to crypto at that time. Shamefully, like I wish I had kind of understood Bitcoin better and understood what was so special about it. But I hadn't. And so it wasn't until 2017 or 2018 when we read the Filecoin white paper. It was really the first time when I was like, okay, here's actually like a credible team, building real stuff. Like IPFS was like, a good protocol that did useful things already without crypto. And like, here's a sort of crypto incentivized version of the IPFS protocol. And I was like, that's actually super interesting. And so I started to think, is there a way for us to revisit this premise of like, can we build a gigantic wireless network built by a community of people and use crypto to incentivize it? And I think Filecoin was really the first time that thought became real, and led us down the path to eventually what became the sort of current version or the last version of Helium.
One other thing I just want to touch on, we always want to tie in the business, the network with, the token, right? Because that's the thing our listeners are very interested in. You've had a few tokens that have evolved within the network and maybe not as impactful. Could you walk us through the evolution of some of the tokens that are around Helium, and also unpack the investment, just a high level of the thesis for those tokens?
Yeah, we've tried. AT&T is the primary token in the Helium ecosystem. Like that's how it launched, and the idea behind AT&T was kind of twofold. Like on the one hand, it would be a tool to solve the cold start problem that networks have, right? Like you want to build this network, but there are no products to use the network at the start. So you kind of need something in order to like get that going. And this was obviously Bitcoin's invention, right? Like let's give Coinbase rewards to people mining blocks, as a way for them to like be incentivized to mine blocks. And so, we copied that exact same strategy, like, deployers of hotspots. And so hotspots were these like little access points that created wireless network coverage. If you deployed hotspots, you earned HNT just for deploying the hotspot. And we built this algorithm called proof of coverage, tried to prove that you were actually deploying a hotspot and it wasn't just, like some code running on a computer somewhere. And so that was the sort of first use of HNT, was that like if you were a deployer, you earned HNT. And I think the best way, like I said, of thinking of that is it's just like Bitcoin miners earning Bitcoin for, mining Bitcoin in the early days. The second use of HNT was that when people needed to use the network, right? So like if you were a sensor manufacturer, like just a random company building a air quality monitor sensor or a weather station like WeatherXM, and you needed access to the network, you would pay for access in HNT, right? So you would pay the deployers of the network with HNT in order to use it, right? So if you had a hotspot in your house and someone has a WeatherXM station nearby and it's connecting to Helium through your house, basically, right? Like they're going to be paying you for that, and they pay you in HNT. The other tokens that you're probably referencing, because that's really it. There's really just HNT. But as Helium started to evolve, like we realized that we could do the same thing that we'd been doing with IoT for other types of network, right? Like you could do it for cell phone networks, for example, which is really what we're focused on today. And so we had the idea like 3 years ago, I think, to like, let's make sub tokens, right? Like, because IoT is very different from mobile, right? Like they're just totally different in terms of what they cost, how people should be rewarded, like everything about the structure was different. So we had this idea, and I think Multicoin Capital, which was one of our biggest investors, proposed this idea of let's create these sub tokens. Let's have a token called IoT, and let's have this token called mobile. And in the future, there might be other tokens, but they're all related back to HNT, right? Like they're all sort of like sub tokens of HNT. I think it was a really clever idea. I like how it was implemented. But at the end of the day, it ended up creating like just too much confusion, particularly from speculators, right? Like people that wanted to invest or buy into the Helium story were like, do I buy HNT? Do I buy IoT? Do I buy mobile? do I buy equity in your company? There were too many venues almost for people to participate. And so I think about a year ago, that idea got scrapped basically, and we sort of merged all the tokens back into AT&T. And for better or for worse, the Helium community has always been super active in proposing changes. Like have been hundreds of hips, as they're called in Helium land, which is basically the community saying, like, we think the Helium protocol should work differently, and here are suggestions for how to do that. And so it's been a constantly fluid and evolving thing, but right now it's just AT&T. I hope it stays that way, but who knows what might develop in the future. But I certainly, for the time being, I'm just considering AT&T like the only token that exists in the Helium ecosystem.
Yeah, that makes sense, and it was very impressive how AT&T was able to bootstrap the supply network on the IoT side. You're doing some other stuff on the mobile side now, heavily. Let's talk about the products. For listeners who are less familiar, in simple terms, kind of what are the mobile products, or just all the products sets? How do you think about that?
Roughly sort of two things, right? Like on one hand, there's the network building side, which is similar to what we've been talking about with IoT, which is that you can either take an existing enterprise grade Wi-Fi access point that you already have, or you can buy a hotspot from us. They work via Wi-Fi, and effectively what you're buying is like a miniature cell tower, right? Like we have agreements with AT&T, Telefónica. We're working like through vendors with guys like T-Mobile and Google Fi and others. And ultimately what that means is that anytime an AT&T subscriber, for example, goes near your hotspot, that subscriber actually starts to use your hotspot as its cell tower rather than the big giant cell tower that might be, a mile or two away. And that's kind of a big deal, right? And the user doesn't have to do anything, right? They don't have to find a Wi-Fi network. They don't have to join it. This isn't like a portal that you'd see like in a plane or a hotel or something. Like, this is a completely automated, seamless process. And the reason AT&T is interested in this is that nearly all cell phone usage these days is happening indoors. It's like 90% of cell phone usage is happening indoors. It's not people driving around in cars or like walking around in a city. It's like 90% indoors. And cell phone towers, where if you think about how they are deployed, they are far away from the corner of a Starbucks that you're sitting in. And so sometimes you might have decent coverage because, cellular technology is actually amazing. But most of the time you probably have like mediocre coverage, right? And so what AT&T and others are interested in is, can they use Helium as a way to like augment their existing macro network? And so those big outdoor networks they call macro networks, with a bunch of indoor coverage. Right. And so we've started to see that become like explosively successful. Right. It's in airports. It's in Vegas casinos. It's in, coffee shops. It's in gyms. It's like literally everywhere you can think of where there are people congregating. There is a community of Helium deployers like rapidly trying to like put hotspots in those places. And the reason they're trying to do that is that they get paid 50 cents per gigabyte when any of those subscribers use the network, right? So there are guys making thousands of dollars a month doing this effectively as a business that are trying to capture as much foot traffic as possible that works on some of these deployers. So that's kind of one side of what Helium does, is that it is a gigantic and growing network of 120,000, 130,000 of these hotspots that serve what they call offload traffic for carriers like AT&T. That's growing. It's going to be in other countries. It's about to be deployed in Mexico. We're hoping like it's December 2nd as we're recording this. Like, we're hoping that goes live in Mexico with Telefónica very, very shortly, like in the next week or two, but we'll see. And we hope to keep growing that in other countries as well. The other side of what we do is a business called Helium Mobile, which is like literally a subscriber cell phone business, right? So that looks like the subscriber side of AT&T, or it looks like Boost Mobile, or it looks like Mint Mobile, or like any of those, cell phone providers. The reason we think Helium Mobile is special and important is that it's sort of the inverse of what I just described. It like primarily uses the Helium network, and it falls back to T-Mobile's network whenever you're out of range. And that allows us to do cool things with pricing. Like, there's a free plan, for example, where you actually get, like a certain amount of data and a certain amount of minutes and text completely for free every single month. And you can only really pull off something like that because you've built the network in the back end with this like completely different economic structure, right? Like we didn't have to spend $150 billion building a network. So we don't need to charge people $100 a month to use the network either, right? It's like a completely different structure. The US has some of the highest, per gigabyte data costs anywhere in the world. I think it's only like Canada maybe that's higher. And that is because of that structure. Like the US is an enormous country. And so to build, a wireless network that spans the country is going to cost you like $150 billion, right? And so the only way they can make the money back from that investment is by charging people a lot of money. And so our model is completely different. Helium Mobile subscribers pay a lot less than pretty much any other cell phone carrier out there. And it's because it's driven by this sort of crypto-powered model on the back end.
I guess just to put a finer point on it, you have this MVNO business, right? Similar to, this is the Helium Mobile business that's like similar to Boost Mobile, Cricket, some other ones. You have the carrier offload business. Those are the two major revenue drivers for the Helium network right now. The IoT business, is that still operational? Looking at your revenue numbers, it looks like it's somewhat negligible to the bottom line, but it's still live, right?
It's still alive. The IoT business, I think, I think the timing for that mattered more than anything, and I'm not sure if we got the timing right. I just can't tell yet, but the network's still very much alive. I think there's like 250,000 odd IoT hotspots still deployed all over the world. I still think it's the largest IoT network in the world, and there are still lots and lots of very interesting applications being built. You just end up in this kind of, from a revenue point of view, you start to need tens of billions or hundreds of billions of like IoT devices to like really register on the scale, right? Like if you look at our mobile revenue, it's pretty good. And the IoT revenues kind of needs a, multiple orders of magnitude increase in order to like, get close to it.
For the purpose of this conversation, I think we're just going to focus on those two mobile businesses, MVNO and carrier offload. So maybe working through some of the KPIs or building a P&L for the MVNO business. Can you give us a sense for how many subscribers there are right now? And I know you mentioned there are several tiers. How many subscribers are paying? And I guess what would the average subscription price look like if you average it out across all paying and non-paying users?
Yeah, I think we're about to hit about 600,000 total signups, which is a pretty big deal for us. Like the mobile industry, it grows, but it grows in strange ways. Like most of the big guys like AT&T and Verizon and T-Mo, with prepaid and even postpaid are losing subscribers now on a pretty regular basis. Like if you follow any of their public filings, like they tend to like be net negative on the subscriber count. And some of that is because they're so massive, right? I mean, we're talking like hundreds of millions of subscribers, like there's going to be some churn. But we're growing quickly. I think Helium Mobile is the fastest growing cell phone plan in the country that we're aware of based on like public stats. Like we add a couple thousand subscribers per day. And that continues to sort of ramp up and grow. I couldn't tell you what the breakdown is of plan type, both because I don't know it, and I probably wouldn't tell you even if I did. But it's looking. I think it's healthy. We have very, very minimal churn, and a big part of like what we think is super important for the next couple of quarters is like, can we get more Helium Mobile subscribers using Helium than T-Mobile? Like that's really the whole game, effectively for us, right? Like we have to pay T-Mobile, X dollars per gigabyte. And that's expensive. And if they use Helium, it is much cheaper than what we would pay T-Mobile, right? So like a big part of our effort is, can we get Helium Mobile subscribers using Helium more and more of the time? Because then I think you've built something interesting, right? Like you potentially like rebuilt AT&T or something, but with a completely different cost structure. And that is working. Like in New York, it went from 0% on Helium to, I think we're closing in on 40% of Helium Mobile traffic now happens on the Helium network rather than T-Mobile's network. And so that thesis is working. And I think it just requires focusing in on like city by city almost in order to like actually cause it to be meaningful.
Could you give us a sense for what the current margin on those subscribers look like? Like what is the, what percent of Helium network usage are you targeting to get to sufficient profitability levels?
I mean, we want to get to like the 30 or 40% number that I mentioned in New York. Like, if you can do that in all the metro cities, then I think you actually have a very profitable business. It's not just slightly profitable. Like, as you guys probably know, like MVNOs in general are terrible businesses, right? And the reason why they are terrible businesses is that they can't change their underlying economics in any way, right? Like if you're Mint Mobile, like you just have to pay T-Mobile whatever T-Mobile asks for, and that's kind of it, right? And so all you can really do is either try and renegotiate with T-Mobile or get cleverer about your cost of acquiring subscribers, right? And I think in Mint Mobile's case, they obviously lean heavily on Ryan Reynolds, and like that was a big draw. And you know what I mean? Like you have to be creative with like how you acquire customers when that's really the only lever that you have in order to like improve your business. With Helium Mobile, the lever that we have is the same, right? Like we can also always do whatever we can to lower our acquisition costs, but really we're trying to reduce our network costs, right? Like that's the biggest cost, right? Is like, can we reduce our dependency on T-Mobile or any, MNO backend, and really rely on the Helium network, pretty much all the time, right? Like, and if we can get to that place where it's like 70, 80, 90%, then you're like wildly profitable, right? Like you have rebuilt AT&T with like zero capex almost, right? And that's what we're aiming at, is like, can we get 30, 40% of Helium Mobile traffic offloaded in every major city? And when I say offloaded, I mean onto the Helium network. And then that is like a meaningful change to our economics. And that's really where we're focused and what we're trying to get to.
Got it. And I'm curious, what is the wholesale price for data from a major carrier look like?
I think both T-Mobile and my own counsel would just assassinate me immediately if I tried to like share those kinds of. It's just one of those things that's like super guarded, partially because it's completely different for every provider. Like everyone is negotiating their own deal, and no one wants to give away what their deal looks like. So we have some sense of what others look like, but yeah, the numbers are sort of what they are, and it's part of why MVNOs are just not an interesting business.
I'm curious, what percent you mentioned New York at 40, what percent across your total mobile business is offloaded to Helium today?
Yeah, I couldn't tell you right off the top of my head, but I want to say it's between 5 and 10%, nationwide. Like, please don't quote me on that or go buy AT&T because I said that or anything like that. But it's, it's in that kind of range. And it's, the US is really, really big is what makes networking here really hard. And so you've got to go to like a lot of cities with a lot of coverage to really start putting a dent in the numbers.
Well, I think that's actually a good thing being there, because it means you have, 10 to 20x. I guess the thing would be cost reduction capability, right? So how do the margins change again? How much lower is it?
I shouldn't say too much because you end up being able to back calculate what the T-Mobile cost is, but it's a lot cheaper than what we're paying T-Mobile.
Did you undercut like the major carriers because of that? At what threshold you really undercut them? Right? When does it become disruptively? Right, that's the question.
Honestly, we're kind of there to some degree, right? I mean, like we have a plan that is free. I don't think there's literally anyone in the country or probably the world that has a free plan. But I think from a profitability perspective, like I said, my view on it is 30 to 40% in major metros, whatever that number is, like maybe 40, 50, 60 major metros across the country. And then you're in business, right? Because you are now starting to like not have to depend on your MNO or like really almost ever in some cases, right? And depending on the user's like behavior pattern. And so like they might go from home straight to an office, right? And they may never touch a cellular network, right? And those guys are highly profitable for everyone because they never touch the cellular network, even though they're paying for it. And so it really depends a lot on like usage patterns. And that's where we've spent a lot of time, is trying to understand what our users are doing, where they're going, and where is it most advantageous for us to try and get the Helium community to deploy hotspots. That's kind of the symbiosis, right? It's like we've got a lot of data and we are trying to share with the community, like in some logical way, to say like, hey, if you put a hotspot here, you're going to capture, tens of thousands of users every day, and that's going to generate you a lot of money. And so that's kind of what we are trying to create, is this relationship between the community and the company, where we are helping to sort of drive where we think coverage makes the most sense. And I think that's been super effective. Some of it is obvious, right? Like put it in an airport, like of course, right? It's just hard to get, an airport to agree. But some of it's blatantly obvious and some of it is not, right? And I think we're starting to see deployers get very, very sophisticated and precise about where they put devices, and that's obviously helpful for us.
I want to come back and spend a little time on the offload in a minute, but just to drill in on the device, I feel like you've transitioned your flywheel a little bit on the supply side from we're paying Helium tokens to get the supply side to now you're trying to really incentivize with paying back to the data fees. Explain a little bit more how that works.
The easiest way of thinking about it is that you've got dollars coming in from outside the system, right? So you've got AT&T, you've got Telefónica, you've got Helium Mobile, you've got guys with actual dollars that are paying per gigabyte for the service. They do that through us as a company. Like for now, we are the intermediary. Like we hope eventually that AT&T would just transact on chain, but we also, realize that that's probably not going to happen anytime soon. So we basically receive dollars from the outside. We buy AT&T. There's another token inside the Helium ecosystem called a data credit, which is sort of like a stable coin that only really exists in order for the price of data to be consistent, right? Like you can't. We don't think you can reasonably operate a service if like one day the thing is one price and next day it's 100x more expensive. And so we built this construct called a data credit, which is effectively a stable coin inside Helium that pays for data. So we basically take dollars, we do all the AT&T data credit stuff, the hotspot owner gets paid in AT&T. That's basically the simple way of thinking about it. And they get paid at a rate today of 50 cents per gigabyte.
And mechanically, are those AT&T purchases that happen on the open market?
They're happening on the open market. There's some, I forget exactly where it is, but we have a dashboard or at least a wallet that is sort of tracking all of that and people are looking at. Ultimately, like you just deploy a piece of hardware, and if there's a lot of people around, you're getting paid probably a reasonable amount of money. And if you go to world.helium.com, you can kind of look at that. We have like a leaderboard of hotspot operators, and you can kind of get a sense of what hotspots are working where. You can look around the map and kind of get a sense of like in your neighborhood, would it make sense? Like, or in your friend's coffee shop, would it make sense? Like there's a lot of data going on Helium World, and it's like a super useful tool for deployers.
To round things out, so we have the subscription revenue coming in, AT&T getting bought, exchange burned, and the data credits minted, and data is used. Can you take us through the wholesale data cost side of that? So I guess you don't know what the cost will be until that data is actually used. So I guess is the AT&T that's burned, is that just the top line subscription revenue number, or is that net of the wholesale costs paid to T-Mobile? Does that make sense?
Yeah, I mean, they're sort of different, right? Like, or we separate. We don't equate the two, or they have no relationship to each other right now, right? So and probably never will. Like if a gigabyte of data is used through the Helium network, it gets paid for at a rate of 50 cents. Like who that was for and why is not part of the like hotspot deployers equation, right? Like if an AT&T subscriber sits in a coffee shop for 3 hours streaming Netflix, like someone's probably made a bunch of money, right? And it's at a rate of 50 cents per gigabyte. And it's the same for Helium Mobile. Like we pay the network 50 cents per gigabyte the same way. I think over time, that is more likely, like if I were to guess, like my sense would be that should be more like a dynamic marketplace, right? Like the fact that it's 50 cents per gigabyte is like very easy to understand. But if I'm a deployer who's gone and negotiated with BWI Airport, which someone did, like I should probably get paid a little bit more than the guy that just has it, in his apartment overlooking a street that might capture some traffic. You can argue they're just going to get a lot more traffic, and like that's why they get paid more. But I do think the value of data is different in different locations, and we'll probably over time want to see an evolution where it is market driven effectively, like where you've got Helium Mobile and AT&T and others sort of almost bidding on like, here, I think the coverage here is worth, 8 cents or whatever the number might be, and that's what I'm willing to pay for it. I think that would be the ultimate state of it, and that's how we thought about it when we built Helium, back in 2018. Was like, it should be sort of this dynamic, like demand driven marketplace, and that would be the only model that would make sense in the long run.
I have a follow up on that. So, like, can anyone? I imagine today it's just that Helium or Nova can offload data, offload to the Wi-Fi spots, right? Is there some world in the future? Like, if I'm thinking about where the network becomes ultra, a permissionless open source network, right? Could one day just Mint Mobile be bidding against you guys to offload? I mean, because that would really, if I'm thinking about it, that because of the flywheel we talked about in the last question, right? Which is, the more data credits, the more network, right? If you, right now it's you guys, right? You're like the first app, you're like the first app on the network, the most important app, right? And you're enshrined in it almost. But if you had other ones, it's like more gas would be paid on the L1 or whatever, to use an analogy. Does that make sense? Is that possible today and in the future?
100% on all of that. The IoT network actually works beautifully that way. Like, anyone can go deploy, and anyone can go serve, and anyone can go do anything on the IoT network. And it was designed that way from scratch. It's exactly what we want the mobile network to be like as well, right? Because as you said, like that's where you get the most leverage at the end of the day, right? Like, the network ends up being the biggest and the most used if we can remove ourselves from the equation, right? Like, if we're not if we're not in the middle of this whole flow, then everything goes faster. But you also need to push it along at the start until it gets that kind of momentum, right? And so what we want in the end is that anyone can, either through us or through GitHub or whatever, effectively download the Wi-Fi certificates that you need that allows them to like cause their devices to automatically connect into the Helium network anytime they're near it. And we should remove ourselves from the equation. Like, we can act as like a intermediary on the payment and the token side, right? Because there's still, a lot of these guys still don't want to go near blockchains or don't know how to go near blockchains. And so that's a service that we could provide as a business. But I don't think we should have to, right? Like, I think if people want to be able to use it on their own, like, they absolutely should. It's not a place, if I'm being honest, that we've spent a lot of time on the mobile network. We did on the IoT network. But there's a little bit of work for us to do to like get the mobile network to the point where it could be used by absolutely anyone without ever having to communicate with us. But it's absolutely possible, and it's absolutely what I would like it to do.
Yeah, I mean, as a point of feedback, I think that would be your breakout moment personally as an outside investor, because it's like Bitcoin, right? Any bank can be on the Bitcoin network and trade on it, or any DApp on ETH can just deploy on it, right? It doesn't have to just be Uniswap or Aave or something. And, like, that is the goal of, I think, for creating, there's obviously your business, and then there's the network, right? And then for the network's sake, that could be even bigger, right? If from what you want, what I hear from the disruptive standpoint, take that for what you will.
Yeah, I will just add before moving on, like, the only part that we really play right now is the business relationships that cause someone like AT&T to offload, right? Like, we are in constant communication with those guys, and there's a lot that goes on behind the scenes there. But from a deployer point of view, you can do exactly what you just described already, right? Like, if I have a coffee shop that has a Meraki access point in it or whatever, I can self-serve my own way onto the Helium network. You don't even have to, you have to never talk to us, right? Like, all of those guides exist, all of those tools exist. The only part that isn't the way you're describing is that someone, which today is us, has to like go to AT&T and say, hey, you guys should use this network because it's going to save you a bunch of money. Maybe it just grows big enough where we don't have to play that role anymore. But that's kind of the only part that we sit in right now is that we are sort of doing business development in between the Helium network and the people that use the Helium network. But from a deployment standpoint, you can do that part on your own already. That can be entirely self-serve.
No, you're saying supply side is is you can plug in. Demand side is still kind of making its way there.
Exactly right. I think it's a great way of putting it.
Cool. So maybe we transition to discussing the offload business a little more. I know you've already mentioned a couple of carrier partners. Could you maybe detail us on how many offload programs are live currently?
Yeah, so it's actually on. I'm going to just double check on Helium World just so I don't get it wrong myself. So 7 carriers are offloading right now onto the network. The major, and that's, the MNOs that I mentioned, and then a bunch of MVNOs. I actually think the service is eventually going to be the most useful for MVNOs versus MNOs, right? Because MNOs are very picky about where they want to offload because they spent so much money building infrastructure. MVNOs, frankly, don't give a shit. It's like, I want to pay the lowest cost at all times, and I don't care how much money you spent on the tower, 6 blocks away. So in the end, I think MVNOs will be ultimately a great market for us. But we've got 7 carriers working in total today. The next sort of evolution of offload is like I said, starting to branch slightly outside the US. So Mexico is up next. Telefónica, which is like a gigantic Spanish telco, has a brand called Movistar in Mexico. That has been a relationship that's taken 2 or 3 years for us to get to this point, and we're literally waiting for switches to be flipped at this point in order for all the Movistar subscribers in Mexico to start using the Helium network that exists in Mexico, which has actually been growing pretty quickly. And then we're having those same conversations with lots of carriers in lots of countries. Basically, I think now that we've gotten some momentum with big names, the other guys are now less scared. No one wants to be the first to try something like this and for it to fail spectacularly. And so that they are not the only ones, I think is making it easier for us to have those conversations in Latin America and in Asia and in Africa and in other parts of the world, where I think Helium could be super useful.
That's great. And can you give us a sense for how much data is being offloaded today and what the recent trend looks like?
Yeah, it's in terms of DAUs, in terms of daily users, I think we hit our all-time high of 2.1 million users last week per day. But in general, it's anywhere from 1.5 to 2 million users a day. And that's anywhere from 50 to 80 terabytes a day worth of traffic that gets offloaded today. And so the cool thing about those numbers is not necessarily the absolute value, but the rate that they're increasing. I think 9 months ago we had maybe a couple of 100,000 DAU, right? And now all of a sudden we're at 2.1 and hopefully climbing. So the rate of growth, I think, is pretty impressive. And I think that's what we're mostly focused on is can we continue to increase the amount of data and the number of users that are touching Helium all the time? And it seems to be going well.
Are the rates for the offload similar to the rates on the mobile side for what you're paying the network?
They're the same. We Helium Mobile treats the network as we are the same outside party as AT&T as far as the network is concerned.
If I'm modeling, kind of talking to modeling an income statement, right? Or for the network itself, is it really just kind of amount of data traffic that's offloaded through the network times that rate is what? Well, I guess there's what's paid out, and then there's what's burned.
So something cool that's happened as a result of on the tokenomics, because it's actually a good point that I should have brought up. We modeled the tokenomics very similarly to Bitcoin, right? There is an amount of tokens that get created every single month. And in our case, every 2 years, that number drops in half, right? In Bitcoin's case, it's 4 years. In our case, it's 2 years. The network is now deflationary, right? Because so much data is going through it relative to how much is being created. The net issuance rate is actually negative, right? And so there's no inflation effectively. It's either flat or negative depending on the day. And that's just going to keep getting worse in a way, right? It will become more and more deflationary. We hope people really care about that because I think it's super important. But it's hard to tell. It's one of these things where crypto fundamentals and price action are so wildly divorced from each other. You still got Cardano in the top 10 assets, or so. It doesn't make none of it makes any sense, right? There's no reason for these things to be valued in billions or tens of billions of dollars. And so I don't know what that's going to look like over time, but from a fundamental economic point of view, the network is now deflationary. More AT&T gets consumed and burned than gets created every day. And the next halving will be, a year and a bit from now, and that will exacerbate it even further. Eventually you will be in a very negative, you'll be very, very deflationary depending on, assuming that this rate of growth continues.
I hear this, right? Like I'm a node operator. I get paid some inflation, which is declining. I get paid some 50 cents per whatever data rate that's per usage, kind of like a transaction fee plus, block reward fee. What portion goes to the burn again?
All of it. So the 50 cents per gigabyte is bought and burned and given to the hotspot operator as a reward. We don't actually sit in the middle of that transaction at all, right? It's 100% pass through. And the way we make money, or that we think we should make money, is by running successful businesses that take advantage of the Helium network rather than being a rent-seeking, gatekeeper in the middle of it. So fundamentally the economics are pass through. Like the fact that we get money from a carrier and that we buy AT&T and burn it, is a service that we effectively provide for free.
How do you burn it and give it to the node operator at the same time?
Yeah, this is where the data credit system exists and is slightly confusing, right? Is that the only way to acquire data credits. So I'll back up for a second to try and explain this. Data is paid for in data credits, right? There's a fixed number of data credits that equal 1 gigabyte of data. The reason we designed that system is that the value of AT&T is fluctuating all the time, right? It could be all over the place. We didn't want an AT&T to have to deal with the random fluctuation of the crypto market in order to use the Helium network. So the only way of acquiring data credits is by having AT&T and destroying it. And the rate at which you destroy it depends on the market price of AT&T at the time, right? So when AT&T is expensive or the value is high, you get a lot more data credits per AT&T when the AT&T is destroyed. So that's fundamentally the work that we do. That data credit is then destroyed again, right? So once we figured out what the appropriate rate is, you've ended up with your 50 cents worth of data credits. That is then just destroyed again. The net new inflation of AT&T, if there is any, is paid out to the hotspot operator. And so you end up with sort of AT&T on one end, data credits in the middle, and AT&T on the other end. And the only reason that complexity exists is to try and make sure that the cost of data is uniform all the time. Because there's enough fluctuation even between the receiving of AT&T on one end and paying it out on the other, that there's a lot of arbitrage that can happen in the middle of that, which is what we saw in the early days of Helium and why we've ended up with this system. So slightly confusing, I know. One of the questions that people always ask is that eventually there's not going to be any net new issuance of AT&T, and what do you do about that, right? How do you pay hotspot operators if there's no new AT&T being created? And there is a system called net issue or net deflation, I think it's called, that actually, what is it called? I don't even remember. There is a system in the AT&T design that accounts for the fact that there will be effectively no new AT&T created, and it will create sufficient AT&T to try and pay for data that gets used on the network. That's an end state that we'll see how that works, kind of in the same way that we'll see with Bitcoin when Coinbase rewards go away. Is there enough incentive for miners to keep operating their network? We think in our case, there will always be enough AT&T being created to pay for the base fee. And that will sort of cover the ongoing cost of hotspot operators that are continuing to run the network. Because without without hotspot operators, we don't really have a network that's worth using. So that's kind of the way that the economics work today. It is slightly confusing. I wish I had a better way of explaining it simply with diagrams. And it's a thing that I think we need to keep working on so that everyone understands it more clearly.
Well, maybe I could try this and tell me if you think this is a bad way to kind of analogize it. I think about your data credits kind of like a prepaid phone card. You go and purchase a certain amount of dollars, and that converts to some minutes on a card, and you load it up, and maybe that's a data credit. And then it's imagine AT&T let you convert their stock to a prepaid phone card credits, and the stock is just returned to the company as treasury stock. It's like a buyback, and the data credit, the consumer has it, and then they use it when they use their prepaid phone card. And if that's all accurate, and what I understand from you as well is that if I'm a hotspot operator, I'm really not getting paid per the data credit as much as I'm getting paid just from the base block reward of you're giving stock comp to operators every month, right? You're giving, on the other side, you're giving stock comp to your employees, to your service providers to run the nodes, right? And that's declining over time, but in the future, it may have some tail emission that's related to that. Is that all fair?
I think it's close. I mean, obviously, just from a securities law point of view, would stay miles away from talking about it being stock-related comp. But I know what you mean. But
from
buy it,
and I get it.
Employee incentives, or not employee, I guess.
Yeah,
operator
I think
incentives.
We've had enough dealing with the SEC that I'm just on high alert. But the data credit as a deployer is sort of an irrelevant construct. It is I think the best way of thinking about it. Right. That it exists. It is a way for us to stabilize the price per gigabyte given the fluctuations of the crypto market. It's sort of like a stabilizer. It's non-transferable. Like you can't do anything else with it other than pay for like a gigabyte of data with it, for which you are then rewarded AT&T back, right? And so I think you're roughly right. Is that it has, as a deployer, you will never see a data credit. It never even touches you. Like you don't even need to know that it exists, right? Like that this complicated system exists in the background is largely irrelevant, right? Like you are just getting paid AT&T at a rate that is equivalent to 50 cents per gigabyte. So, and that we think makes it relatively straightforward for people.
You are still getting benefit from that AT&T destroyed, right? I mean, all token holders do. As someone getting that new issuance of AT&T, implicitly, you benefit from other AT&T getting destroyed simultaneously, right?
That's how it should work. But whether practically speaking, I mean, there's a whole debate that I always have with people. Like I've had this debate with people on Twitter, whether burns actually matter at all, right? Like does not just for Helium, but just, for crypto projects in general, does deflation, does the burning mechanic matter at all, or is it purely just a function of like demand, right? Like is demand really the only thing that sort of drives any of this? And I think there's reasonable arguments to be had either way, but yes, like ideally everyone benefits from the fact that there are less tokens in circulation after all of this is said and done.
Now, just to be clear, to run a node, a hotspot, you don't have to hold AT&T, right? It's not like staking for ETH, right?
No, you don't. You either buy the hardware from us or you configure your own Wi-Fi access point to do it. You connect it to a wallet and then you just receive AT&T. That's the end of the story. I've always found that kind of like lock up the asset so that you can receive more of the asset to be a strange kind of construction that is, I'm not sure that I fully understand.
Unless you need it for some security or just like network governance principle, I think you're right.
Yeah, I mean, and for governance, it kind of makes some sense, right? Like you want the people making decisions about whether how the network evolves to be long-term aligned, right? And Helium does have that concept, right? Like there is a governance voting, aspect to AT&T, and you get more governance if you lock up for longer, and so I buy that argument, right? But the stake AT&T to earn more AT&T by running a node is just too circular for me to like make any sense of. But maybe I'm just not that smart, and it makes perfect sense. But when I see other projects doing it, I'm like, that makes no sense to me at all. And so we've stayed away from that for now.
Do you have an internal target for net revenue, say 12 months out for the network? Like what would you measure as like a barometer of success for Helium? And just to be clear here, we're defining revenue as AT&T burned.
Yeah, I mean, we would like to see. We mostly think in terms of DAU at this point, so maybe not a helpful answer to your question. But I would like to see 10 million DAU happening regularly next year. And so in theory, that should be 5 times as much data as we're seeing today, which should be $300,000-$400,000 worth a day of traffic, which hard to predict what that means in AT&T. But that's how we think, right? Is that we think in DAU and traffic. and you can sort of back into things, but you don't know what the value of AT&T will be at the time. So we just try and focus on DAU and the sheer amount of traffic that'll move over the network. And I think we'd like to see 10 million DAU, and I would like to see 250 terabytes plus. I would love to see a petabyte a day of data start to be a thing that is realistic in the next 18 months.
And what would you want for those 10 million DAU would be your goal for paying? Because you obviously have the free plan.
Well, the 10 million DAU is like all users of all kinds across the Helium network, right? So that's offload users that we don't own in a lot of cases, right? Like we don't own the AT&T customer, right? Like that is their subscriber that uses Helium and pays for that. And so when I say 10 million DAU, I'm referring to like all of the offload that will happen on the network, whether it's AT&T or Telefónica or like hopefully many other carriers that end up using Helium. From a Helium Mobile subscriber point of view, like I said, I think we're closing in on like 600,000 like total signups. And for me, I'm actually much more focused on the percentage of data offload than I am the sheer amount of subscribers. And the reason for that is you can buy subscribers. Like that's what you do, right? You spend more marketing dollars on one end, subscribers come in on the other side. That is only interesting as far as I'm concerned if that business trends in this super profitable, unusual for an MVNO way, right? Which means that those subscribers have to be using Helium a hell of a lot of the time versus using T-Mobile. And so while I want the subscriber numbers to keep growing, and I hope they end up at 5 million or something in the next 18 months, it would still be a terrible business if those 5 million users were just traditional MVNO type users that 99% of the time were touching the T-Mobile network. I don't consider that an interesting business at all. Like I think the MVNO business in general is really, really difficult. It's struggling even more because the MNOs are acquiring their MVNOs, right? So like T-Mobile has acquired Mint. Now has like probably special rates inside T-Mobile, like is able to do things differently. You've then also got MNOs launching their own MVNOs, like Verizon with Visible, who again, so the MVNO business is getting crushed down. And so I'm not super interested in just like, let's get 5 million subscribers. I know how to do that. It just costs money. What I am more interested in is like, can we rebuild fundamentally what an MNO looks like? Right. Like, and if we can do that, then I think the business becomes worth hundreds of billions of dollars because it looks completely different to anything out there today. So that's how we're thinking, is that when I talk to you about 30-40% offload per city, those are the metrics that matter a hell of a lot more to me than just piling subscriber numbers on, which, while make us feel really good and is good, matter, I think, over time less than can you optimize the economics of the business in an interesting way.
You guys could always poach Ryan Reynolds.
Isn't he involved in some lawsuit that made him uncool? I haven't been following that, but there's something. I read something going on, but I don't know.
From my fiance, I have heard the same thing. I am not ingrained in the entertainment culture, but I don't think he's on the popular side anymore.
My wife said the same thing. There's something going on there where like he and Blake Lively are involved in some lawsuit that makes them look really bad. And so
you know what? I think I heard my wife talking about this as well. Yeah, it's coming back. All right, forget that idea.
Yeah. All right.
What do those MVNOs charge? What's their subscription price?
It's kind of all over the place. I mean, I think Mint is on the order of, actually, I'm going to stop for a second and say something just which I hate, which is that everyone markets in the most disingenuous way, right? Like, so you'll go out there and you'll see that like X phone plan is like $8 a month, but then there's like 4 asterisks next to it, and the asterisks are like, you've got to sign like a 4-year contract, or or you got to prepay for 4 years in order to get that rate. And so it's really difficult to actually figure out what the going rate is for like in an honest way, right? Helium Mobile, we have free, we have $10, we have $30. Those are our plans. $30 is completely unlimited. $10 is somewhat unlimited. Free is, heavily restricted. Everyone else, I couldn't even comment, just because, like I said, you can go out and see a price like, Mint Mobile is $15 a month, but then you realize you got to pay 4 years worth of it up front, and I think that kind of defeats the purpose. I'm making that last part up just before anyone gets too crazy and tries to sue me or something. But it's just a pattern that exists in the industry where you'll be presented a price, but how you actually get to that price is not really very straightforward. We think of prepaid as what does it cost per month without any other strings attached to it, and that's that's kind of how we operate.
So maybe we transition to chat about governance real quick before we have to let you go. How does governance on the network work right now? I guess we just talk about how governance works for the protocol itself first.
Yeah, so there's an improvement proposal process that we borrowed from Bitcoin. So just to like recap, Bitcoin has this process called a Bitcoin improvement proposal. Effectively, anyone in the world can on GitHub go and propose a change to the protocol, and like here's the code that makes the change, and here's why I think it's a good idea, and here's what the good and bad effects would be. And so we kind of copied that. So we have HIPs, and there have been almost 200 HIPs since the creation of the network. The vast majority of them are not written by us, which I think is super cool. And ultimately, HIPs get created, and the community votes on those creations. And the way they vote is by locking up AT&T in for the purpose of governance, right? And so if you've got one AT&T, you can lock it for a varying duration, right? The longer that you lock it up, the more voting power you get. And again, that's the intention there is like, you don't want tourists effectively making long-term governance decisions in the protocol. So you lock it up for 4 years, you get a lot more voting power than if you just lock it up for the day in order to vote. And that's basically how the system works, is that anyone, including us, can propose changes to the system in the form of a HIP. They happen on GitHub. There's a voting process that happens. I forget where that lives. I think that's heliumvote.com. And people get to vote on the proposals that are out there. And if they're passed, they get implemented. And if they're rejected, maybe they're rejected forever, or maybe the author goes and changes some things and then comes back and proposes it again. But that's typically how the process works. Got
it. So it's like a vote escrow model. What does the participation look like in governance today? And, is that vote escrow token, is that a significant supply sink right now? Like what percent is locked?
It's actually a really good question. I actually don't know the answer top of my head. It used to always hover around, 30 odd percent of the supply was locked. I don't know if that's still true anymore. But yeah, it's always been a reasonably healthy amount. We've added this sort of concept of like proxying and delegation now, which I think has actually really helped, right? Because people want to participate in the governance, but don't necessarily have the time to like read through some of these super technical proposals or documents. So you can now act as a proxy. If people trust you, they will sort of, loan you their tokens, or they will delegate their tokens to you, and sort of trust your voting decisions. And I think that has helped with participation, because some of this stuff is incredibly sort of meaty to like get into. And I get why not everyone has the time to do that.
And just on that, I know we've talked about obviously Nova Labs and the network. Are there any other entities? Is there a foundation on the governance side that's involved, or how do the entities work?
We've had a foundation. We still do. I am one of those guys. I forget who else. There's someone from Andreessen Horowitz did a really good blog post about this. Maybe it was Miles Jennings. I don't know that the foundation model is a good one, if I'm being honest. Like I think they've always kind of existed as an attempt to shield from regulation in some way, but I'm not sure that it's actually a great model. But we have one. Fundamentally, like the function of foundations, I think, has always been to like try and promote the protocol sort of broadly, like separately from a business interest. But I think if the business is designed well enough, they kind of have good symbiosis, and ultimately, you kind of want to get to a state where no one is governing the network to some degree, right? And like ultimately, it should get to a place, sort of the way we discussed, where anyone can use this thing. And really, the contention is like how do changes get made, right? And the Bitcoin version of that is changes basically never get made. And the Ethereum version is like sometimes they get made, and the Solana version is they get made pretty often. But I think that's the sort of rub and like why you ultimately might want a foundation over time. But yeah, we have one. But if I'm being honest, I don't think that model has been super effective, and a lot of times wish that we hadn't bothered with it.
Great. And can we move to maybe just kind of the risks and then catalysts? You know, I mean, I have a couple of specific ones I'll ask about. Maybe but what risks do you think are the key risks? You know, for you know, Helium, the network, and AT&T, the token.
To think about the biggest risk to all of that, it would be that. Well, actually, let me back that up for a second. I mean, really, the biggest risk always in a network like this, I think, is momentum, right? And maybe that's just true for startups in general. Like someone said recently that the only metric that really matters for any startup ever is just momentum. And it's an interesting way of thinking, like, and there are lots of arguments to be had as to whether that's true or not. But I think that would be my biggest concern is like, will there always be enough momentum and excitement around this model that people still want to keep building the network? It will always be true for like those sort of mini entrepreneurs, right? There's almost guys that are like running mini ISPs here that are buying like hundreds or thousands of hotspots and treating it as a business. But I also want everyone to participate in it, right? Like it should be exciting to be able to like get Verizon out of the equation and like, you know, build telecommunication networks that are run by the people. I think is an amazing model, an amazing concept, and I'm a huge privacy advocate, and I love that. But I would hope that everyone else does too, and that my concern, I think, over time would be, does that model excite people? Like, do people still feel excited to participate, or does it stagnate over time and sort of just become a business to some extent to people? So that to me would be the biggest risk. I don't think there's any risk of like, does demand for data increase or decrease? Like it is on a, you know, ridiculously looking steep curve that just keeps going up. And now we're on 4K, and then there's 8K, and I'm sure there'll be 16K video, you know, and so like the amount of data that gets consumed, it just keeps going up. And I don't think it can be captured by the existing design of telecommunication networks. And so something else has to change. For outdoor, that is almost certainly going to be satellites. For indoor, that should be something like Helium, where satellites are not going to be effective either.
Would you say Nova is very well capitalized and has a very long runway?
Yes and no. Like, I mean, I'm always nervous about capitalization and runway, but I think we're looking pretty good, and we have historically, I think, it's why a big part of why we've been able to stay alive for 13 years is that we are smart with our money. And I hope to continue being smart with our money.
On the other side, what are some of the, you know, key catalysts for Helium, the network, and AT&T, the token?
That's really going to be, I think, expansion into other regions at some level, right? And partially just because it captures excitement, right? Like you get mind share that way. With the IoT network, you know, everyone anywhere in the world was deploying this thing, and you get a lot of like, it sort of exists in the universe. Like people are talking about it all the time, just in sheer number of participants. And so I think expansion into other countries is going to be a big deal. I think it's going to allow the Helium network to capture more attention and more mind share, which causes the network effect for it to get faster. But otherwise, it's going to be the continued work of like getting more Helium network deployed in more places where there are more people. Like I think we just went live in like 2 Vegas casinos. And that was like an impossible thought to me like a year or 2 ago. And so you're going to just start seeing traffic numbers that look insane because you're going to be capturing like people that are sitting inside casinos. And so I think that's going to be like the main driver from a metrics point of view in terms of growth, is just going to be getting more Helium coverage in more places where there are more people with phones that tend to sit around and like consume data. And I think we've started to get very effective at that, and we'll just keep doing more of that.
Any plans for, you know, a lot of companies have gone public recently, you know, Consensus is going to go public. There's, you know, any plans for you guys to go public? I mean, the DAT craze has probably passed a little bit, maybe not on that. But any thoughts on that side?
Yeah, I'm interested in it. I'm interested in it in not the traditional IPO way. Like, I think most IPOs are a little bit of a scam, in terms of the way that the price discovery works and like who sits in the middle and who benefits from all of that. I don't love that at all. So I'm definitely interested in the work that guys like Superstate are doing with Solana, Robert Leshner's company, where there may be this sort of growing a thing that grows where you IPO sort of directly on chain. Well, basically, I actually think ICOs had it right. There were just too many scams, right? But you kind of want a model where anyone can participate in the IPO process, I think, right? And it's not front run by bankers and the price discovery is organic. And if that can exist and if it can happen on chain, then I would love to be part of that. I think that's awesome. I thought ICOs were amazing because they allowed everyday people to participate in early stage like tech companies in a way that they don't usually get access to. The problem is they were just, it was 98% scams, right? That was really the problem. But if you can like somehow blend those things together, then I think it's incredible, because by the time average retail gets to participate in an IPO, like someone's up 1,000x or 10,000x already, right? And I don't find that to be a great model.
In that world in which Nova Labs were to, IPO, how should investors think about the value split between the network and equity holders?
I was hoping you weren't going to ask that question because it's such a complicated one. And we've had, and I don't have a great answer to this, to be quite honest. The best answer that I have right now is that we are reinvesting heavily in AT&T in the form of buybacks and burns. Should Nova Labs equity just become tokens? Like maybe like that maybe that's a reasonable way of doing it. Should all token holders become equity holders in the on-chain IPO'd version of Helium? Like maybe. I think it would be a lot cleaner if there were a singular asset that represented everything to do with Helium. How you got there is complicated, and I don't have a great sort of. We've had, by the way, dozens or hundreds of conversations around this, and I still think it's worth exploring. I just don't know how to do it, and I don't think people should get worried about like, well, what will the inflation of AT&T be? Like that's not the conversation to be had. Like I don't think it makes sense to do it if you have to inflate AT&T by like 400% or something to buy out equity holders. That would be a non-starter. But I do think there are interesting ideas to like discuss and get into, but some of it really does depend on that regulatory framework. Like, can you get an on-chain IPO going? Like, is that a thing that's ever going to happen? And if it does, then I think it opens up more doors, and I think there are super interesting ways of solving that issue if you could do it that way.
Yeah, well, I mean, you're absolutely right, and of course, there's obviously been some path dependency with the regulatory landscape that's kind of led us to this scenario. So certainly, empathetic to the call it a conundrum that you may or may not face.
It's getting better, though. I got to say, I mean, like the fact that we're having any of these conversations around Genius and all these other, acts are that is a enormous shift. Like as someone that was on the receiving end of the last version of the SEC, I can definitely tell you that like things are vastly better now than they have been in the past. And I'm super optimistic about what that allows us to be able to do. I think it's important that, there's still way too much pump and dump scanning, straight up fraud, like all of that should just, die in a fire somewhere, so that those of us that are really trying to do something useful can just get on with it. Because it really sucks to be sort of lumped in with all of that, which is I think the way the last SEC thought about all of this was it's just all a scam.
Well said, Amir. With that, I think we could close things out. I don't know if there's any last closing takeaways that you want to leave listeners with before we depart.
Always want people to deploy more hotspots and become Helium Mobile subscribers. And that's helium.com and heliummobile.com for both of those things.
There you have it. Well, Amir, really appreciate you joining us once again. And hopefully we can do this again in the future. Maybe get an update 12 months from now on those DAUs and offload numbers.
Yeah, would love it. Thanks for having me.
That's a wrap for this episode of Level Up, where liquid token protocols meet the sharpest minds in institutional investing.
If you found value in today's conversation, don't forget to subscribe and share it with your network.
For more deep dives into blockchain's most compelling projects, reach out to us or follow the Medici Network for more insights. Until next time, keep leveling up.